Welcome to The Explainer. Today we're tackling a reform that's, well, it's not just a tweak to the rules. It's a fundamental reshaping of India's entire financial sector. A change so big, people are calling it the insurance industry's Big Bang moment. So yeah, let's get right into it.
To really get a handle on the stakes here, let's play a little what if. What if the Indian Parliament passed a landmark bill, a hypothetical act we'll call Sabka Bima, Sabki Raksha, which means insurance for all, protection for all. The ambition, and this real quote from Finance Minister Nirmala Sitharaman on past reforms really nails it, is huge. To unlock a flood of new capital, spark innovation, and finally get insurance into every corner of the country.
All right, so to really unpack what a move like this would mean, and we're talking about a country of over 1.4 billion people here, we're going to break this explainer down into 6 parts. We'll look at the Big Bang itself, decode the new law, ask why this is even happening, trace the long road to get here, check out the winners and losers, and finally look at the challenges ahead.
So what exactly are we talking about here? What's in this hypothetical act? Look, this isn't some minor update. This would be a complete overhaul. We're talking about ripping up and rewriting 3 massive foundational laws, some going all the way back to 1938. It's not just changing the rules, it's a whole new game.
Okay, if there's one number you need to remember from all of this, it's this one, 100%. 100%. That would be the new limit for foreign direct investment, or FDI, in India's insurance companies. That's a huge leap from the 74% it is now. This isn't just opening a window, it's taking the whole door off its hinges for global insurance giants.
And here's the kicker. It's not just the 100% number that matters, it's how you get there. It would all be done under what's called the automatic route. And trust me, that's a really big deal. It basically means no more needing to get permission from the government on a case-by-case basis. It cuts through a mountain of red tape and, it sends this massive signal that India is wide open for business.
Right, so we've got the big headline number. But a bill like this would be so much more than that. It's a complete modernization project for the entire regulatory landscape. So let's get into the nuts and bolts of it and see what the new framework would look like.
This might actually be an even bigger deal than the 100% FDI limit. Forever, basically, the rule has been that any insurance company in India had to be Indian-owned and controlled. It was the foundation of the whole system. This new bill, it just gets rid of it. Completely. Gone. For the first time ever, a foreign company could come in and have total control, no Indian partner required.
And this table, wow, it just lays it all out, doesn't it? The sheer scale of this shift. We've talked about FDI and ownership, right? But look at the other stuff, the board. It goes from needing a majority of resident Indians to just one key person. That gives a foreign owner so much more control. And reinsurance capital? Slashed by 80%. That's designed to pull in the big global players. Even for brokers, things would get way easier. One license and you're done. They're literally streamlining everything.
And the changes would keep coming. The regulator, IRDAI, would get some real power, something called disgorgement powers, which is a fancy way of saying they could take back money from companies that broke the rules. That money would then go into a new fund to protect policyholders, which is pretty cool. Even the state-owned giant, LIC, gets more freedom to go global. And, maybe most interesting, it opens the door for brand new types of insurance companies, think specialists in things like cyber attacks or shipping.
Okay, so this all begs a pretty big question, right? Why do all this? Why such a massive, radical change to a sensitive industry like insurance? What's the problem they're trying to solve here?
Well, the short answer is there's a huge gap. Couple of gaps, actually. There's a gap between the money the industry has and the money it desperately needs. And, more importantly, a gap between the number of people who are insured and the millions who are left totally exposed.
This chart really says it all. It shows insurance penetration, basically how much of the economy is covered by insurance. You can see India is way down there at around 4%. The global average, almost double that. And that gap isn't just a number on a chart. It means millions and millions of people have zero financial backup if something goes wrong, a medical emergency, a bad harvest, anything.
So, how do you fix that? You need money. A lot of money. And this is the number, straight from the head of India's insurance regulator, 50,000 crore rupees. That's about $6 billion US. And get this, that's what's needed every single year to even start closing that gap we just saw. There's just no way that kind of cash can come from within India alone.
So yeah, it's about the money, but it's also about a few other things. You can boil it down to 3 big reasons. First, you've got this capital thirst. The Indian partners in these companies just can't keep pumping in the cash needed to grow. Second, you need what they call patient capital. The long-term money that insurance provides is perfect for building big things, like infrastructure. And third, and this is a big one, tech. Global insurers have amazing tech, AI, risk modeling, but they're not going to share their best stuff if they don't have full control. This reform would change.
But, a big bang like this doesn't come out of nowhere. This would be the final chapter in a really long story, a story of slow, careful reform that's been going on for over 30 years.
Just look at this timeline. It really shows you the whole journey. It all started back in 1956 with a total government monopoly. Nothing else. Then, finally in the 90s, a committee says, hey, maybe we should open this up. It takes until the year 2000 to actually let private companies in, and even then, foreign investment was capped at just 26%. From there, it was this slow, careful crawl upwards to 49% in 2015, then 74% in 2021, and now the final jump to 100%. Every single one of these steps was a huge fight.
Okay, so when you make a change this big, there are always going to be winners and losers. So, who comes out on top here? Who's worried? And whose job is it to keep an eye on everything?
Well, the obvious winners are the big global insurance companies, your Zurichs, your Allianzas. They would finally get the keys to the kingdom. But you know who else wins? Their Indian partners. For a lot of them, insurance isn't their main business. So this gives them a perfect, very profitable way to cash out. Okay, but what about you, the person actually buying the insurance? Well, the theory is pretty simple. More competition is good for the customer. It should mean more choices. Maybe some really innovative new products, like insurance that pays farmers automatically if there's a drought, or better protection against cybercrime. And hopefully all that competition will push prices down and make companies pay claims faster.
But not everyone is on board with this. Not by a long shot. The big employee unions have always been strongly against this kind of thing. Their argument is pretty straightforward. You're taking decades of Indian savings and handing control over to foreign companies. And they're worried that the whole point of insurance will shift from being a kind of social safety net to just being about maximum profit.
All right, so let's look to the future. Getting a bill like this passed would be huge, for sure. But that's just the beginning. Making it actually work is a whole other challenge. And a lot of people are pointing out some big things that might be left on the cutting room floor.
Yeah, one of the biggest missed opportunities everyone talks about is something called composite licensing. All that means is letting one company sell everything, life, car, health insurance, all in one place. But that wouldn't be in the proposal. So you'd still have to go to different companies for different things, and for the insurance companies themselves, it means more paperwork and the higher costs.
And looking ahead, there are some pretty big risks to keep an eye on. First, what happens to our data? With foreign companies in full control, how do you make sure all that sensitive health and financial info stays safe and secure in India? Then there's the risk of cream skimming. What if these new companies only focus on the easy, profitable customers in big cities and ignore everyone in rural areas? And finally, there's trust. Insurance here is built on relationships. Can a big global brand really build that same connection?
So it all comes down to this one big question. Does a reform like this actually deliver on its name? Insurance for all, protection for all. Or does it end up creating a fancy new market for the wealthy, leaving everyone else even further behind? That's the billion-dollar question. And only time will tell.
Look, there's a lot to unpack here, and the story is still developing. So if you want to go even deeper, do yourself a favor and head over to our website. The link is right there in the description. We've got detailed notes, a really cool explainer comic to make it all visual, and a mind map to help you lock in all the key points. It's all there for you.